evening. Good to have you with us in the 9 p.m. edition of the Urban Debate. We're going to put the spotlight on the economy tonight and understand just how the second wave of COVID has impacted the growth, the economy, livelihoods, and the businesses in our country. Let me actually give you an overall picture of where we were 6 months ago and what our expectations were after the massive hit that we saw last year with the lockdown and then a very, very slow reopening process that we saw. In the first quarter of last year, our economy, remember, contracted by 23%. And since then, we slowly began to improve. So there were expectations that this year, because of that lower base and contraction, we will emerge out of that contraction and recession and at least begin to register growth and see about 12% growth, 13% growth. The numbers vary. But now, as the second wave hit us, and we saw pretty much, over 90% of our country's GDP, wherever it is, the biggest contributors, those geographies are in lockdown-like conditions, toughest of the curbs, and that's impacting the businesses. And so again, we've begun to see that most experts are recalculating how our economy and the growth will pan out. So the RBI is yet to change its forecast, and so is the IMF. But for example, JP Morgan has revised its forecast from 13% to 11% for us. Moody's has revised it from 13.7% to 9.3%. Quantico has actually revised from 11.5% to 10%. CARE Ratings has revised it to 10.2, and India Ratings has brought it down a little bit from 10.4 to 10.1 in the latest round of revision. Now, let's take one sector as an indication of how things have begun to slide again. And I want to take the example of the automobile sector. There are two aspects. One is the wholesale numbers that we get. In wholesale numbers, if for passenger sales, if you see on a month-to-month basis, we saw a 10% drop the last time around. Wholesale of two-wheelers saw a 33% drop on a month-to-month basis. Similarly, for passenger vehicles, showroom sales or front-end retail sales, 25% drop. Two-wheeler showroom sales down to 27.6% on a month-on-month basis. This is the latest data that has come in. That is just an indication of where things could actually now again worsen and where the pain could come. The consumer sentiment, your and my sentiment, barely improved, at least not on an overall country basis. And now more and more experts are telling us that things do look as if we are staring at another dent in the economy. Barclays said underlying economic toll appears larger than expected. Economic costs of the recent COVID surge are rising rapidly. JM Financial Report was actually the one that said almost 90% of India's GDP is under lockdown-like curves. So we expect, some big impact to be visible from that. And impact on GDP in second wave more from health channel, which has completely left us overwhelmed, said SBI's latest report. I have a simple question. Is this going to be as bad as last year? Or because it's the second consecutive year of pain, does it just make matters more worse? Where do we stand? That's the big question. Let's say good evening to Sandeep Bhardwaj, CEO for Retail at IIFL Securities, Dhananjay Sinha, Managing Director and Chief Strategist at JM Financial Institutional Securities, Devendra Kumar Pant, Chief Economist at India Ratings, Siraj Hussain, former Agriculture Secretary, joining us this evening, and Prasenjit Datta, former Editor of Business Today and Business World Magazine, also joining us right now. And Prasenjit, I want to start off with you. And then one overarching thing which is also very different in the second wave than we saw last year is that it's now impacted a larger part of our country. In not only the big cities in a few handful of the states, but across the country, all kinds of states and rural India. Now, once the rural India comes into picture, would it mean a bigger impact of some kind?
It depends on what you call a bigger impact. If you are comparing it with last year's drop, and because we are only in quarter one and we are seeing the numbers of, if we compare it with last year when the economy had already contracted, the numbers will look slightly better. But if you are looking at what is the long-term impact, I would say that it is quite bad because last year in the first wave, the rural economy was not impacted. Last year, the deaths, at least anecdotal evidence says that the deaths and the cases were far lower. People had managed, when the economy opened up slowly, things were slowly getting back on track. Employment was improving, offices were starting up. When this thing happened, the second wave happened now. So I would tend to think that on the top of all the problems that we faced last year, if you look at this year, the impact is definitely going to be worse. Though, if you compare it from an already low base, it may not show up as much as last year showed, because last year was against a economy which was growing, whereas this year you are already comparing it with an economy
Correct.
which was already down. So that is the point.
Yes, no, you're absolutely right there. So, for example, economy which is growing even though at a lower rate of 4.5% contracted, and so that as a number, as a statistic, it was huge when we said, oh, contraction by 23%, and from there on, it may not look as bad. But from the other perspective, that we've had one bad year and now we're looking at another bad year. So where does it take us, in an overall picture? That's, a lot of people are asking questions about that. Let me actually also bring in, since we're talking about rural, Mr. Vinkesh Gulati. Mr. Vinkesh Gulati, what is the sense that you have in terms of demand and sales for automobiles, and not just the big four-wheelers in the big cities, but even the two-wheelers and the demand from smaller towns and rural parts?
So, Tamanna, as you remember, if you talk about last COVID lockdowns and opening up, what supported the auto retail a long way and a good way was the rural India, which was the Bharat. And we actually saw that the first half of the year saw around a 50% degrowth, but the second half of the year saw a degrowth of only 20%. So we improved. Our recovery was faster in the second half. And that is where the major stress today is. Bharat supported us last year, but this time COVID spike, COVID effect is clearly being seen in rural, and the kind of treatments or the kind of acceptance of COVID by the rural India is not as good as what we are seeing in city. So they are not going to doctors, getting treated. So obviously the effect is worse as compared to last year. And if this is happening and what we are seeing, so it means the entry level vehicles like two-wheeler or the entry level cars will be the worst hit coming forward. And because rural has been hit a lot this time, so the growth percentage, or you can say the recovery would be slower than last year, and maybe what we had recovered last year we'll not be able to achieve this time. That is what a ground reality is showing as of today.
So the recovery is going to be going to take longer, and maybe not to the levels, obviously not to the levels that we were expecting. A lot of hope and expectations were on rural parts of India that kind of supported us last time around, but may not be able to do it this time, because in fact, the COVID disaster and the damage has been way bigger than what we've seen in cities, and half of those reports don't even emerge out because there is no healthcare infrastructure present. There's also none of us present there as we get quarantined in the big cities. But let's talk a little bit more about this, and I want to bring in Mr. Siraj Hussain as well. Mr. Siraj Hussain, a lot of our initial hopes and projections, focused largely on good agricultural season and a good crop that could help us get back on the growth path faster. Now, while that may still take place, the fact that people living in these areas and involved in agriculture are going through such tough times, how will that really impact the agricultural economy?
See, as far as the agriculture economy is concerned, we have to remember that a lot of it is non-agricultural economy. So the share of agriculture and rural output is just about 40%. 60% comes from construction, uh, industry, food processing, etc. Now that is very badly hit. In fact, whenever I talk to anyone in rural areas in UP or Bihar, I am told that there is hardly anyone who has not lost somebody known to him in the second wave of COVID. So that has put a lot of pressure. I think the remittances from the urban areas to the rural areas have also been very badly hit, which is going to reflect in the uh, slowdown of demand for various items like tractors, motorcycles, etc. Marriage season will also see lower spending. However, I must say that the farmers were able to sell their wheat crop at MSP, even though their chana crop and masoor is still with farmers, but due to high commodity prices, they are likely to realize a better price whenever the mandis reopen. And lastly, the sowing is not likely to be affected in my view, because the all indications of COVID show that we are now past the peak in most parts of India, and therefore when the kharif sowing operations begin in another month's time, uh, then we should not have much problem in the rural areas. That is my sense.
Okay, fair enough. Let's hope that happens. Let me also say, bring in Sandeep on this. Sandeep, your sense, are we going to look at a more damaging dent? Let's put it like that, because this is also going to be a second consecutive year of pain in the economy.
Yeah, hi Tanvi. Thanks for having me on the show. So what I feel is that last year we lost quarter 1, quarter 2, and part of quarter 3 in significant lockdown all India. But what I see, and last year we didn't have any hope in terms of vaccination in place. So the entire year went in the just hope and anticipation that something will happen. But this year, though the number peaked, in the last week of March, and started peaking from the last week of the March and April, it touched almost 4 lakh. And when we see that vaccination is taking place all India, and government has opened up the vaccination from 18 years and above, and that is also taking up in shape. And what has also happened now, the states have taken their individual decisions to put curbs or the lockdowns or restrictions like a lockdown, depending on the locations or cities impacted. So it is not kind of all India lockdown. So I'm still hopeful that, I think quarter 1 seems to be larger impacted. But this time death ratios are a little higher. But I anticipate that the vaccination is taking, place fast. And the recovery should take place, much earlier than what has happened in the last years. This year should not be the complete washout. And the demand should start picking up once states start removing these, lockdown or restrictions. And I'm hopeful that, demand should come up.
But what you said about, I am not as hopeful as you are when it comes to vaccination, Sandeep, because we frankly don't have any right now. I don't think that situation is going to change before the month of June. So even if we have to pick up pace from the current 19.5 crore to anything further, it's going to be many, many more months. And who knows by then what, how the mutant has changed and everything. And obviously we can't project that or forecast it. So we're not going there. But individually, states and cities are now going to go into lockdown like curbs, perhaps again and again. States are already preparing for third wave and maybe a fourth. Now, are businesses really prepared to take that kind of hit? I mean, if industry shut down in one state, it is obviously going to impact the supply chain in multiple states across the country. If migrants have gone back home from states like Karnataka and Maharashtra, they're not going to come back in a couple of months again, only to find that in 3 months later there is another lockdown. So how do you factor in that uncertainty?
See, absolutely, you're right. The situation looks grim at this point in time, looking at the 90% of India at this point in time under restrictions. But if you look at the pace, though it sounds to be low, but I am sure the government is taking the right steps to increase vaccination across. So this is my expectation that at least it should take approx couple of more months where this vaccination should take place, and restrictions should start opening up. Once that happens, we should see that fairly demand should pick up in most of the industries. At this point in time, though it looks doubtful, but we need to be hopeful that that I'm sure that these things will improvise.
Okay, let's say good evening to Dhananjay Sinha as well. Dhananjay, one of your recent reports from JM Financial has done a calculation that says that about 90% of the India's GDP is currently in lockdown-like curves, various intensity in terms of strictness, but similar kinds apart from the night curfews. Now, what impact does that have on the economy? And I'm not just saying the way we saw it last year, because in the last 1 year, businesses have somehow pulled through. They have found ways to cut costs. They have found ways to borrow more money. They found ways to somehow hold on to whatever they have and tide through 2020. Now, if we're going to look at a similar situation, even of a lesser intensity, what does it mean for those businesses which are already on the edge?
See, thank you for having me for the show. I think the key thing to really look at, as somebody said, my earlier panelist said, it is sort of a partial lockdown and it's very concentrated in certain areas. So there are, partial lockdowns and the level of business may have actually come down, but the businesses are happening. So that's a very important thing. The level of stringency, if you look at the measures of level of stringencies, I think if it was 100% in last year during April to May or June, we are, so it came down to something like a 60%, and we are up to 70%. So compared to the benchmark of 100%, we are 30% still lower. So that is an important thing if I look at the comparison between the national lockdown and the current lockdown. So important thing is that, this should have been the case last year also, that there should have been localized lockdown rather than a national lockdown. So that was a clear policy, policy mistake, I would say. So what you are doing today is what they should have done last time also. Right now, what is happening is that every state knows the level of spread, the level of casualty, etc., that is happening, and they are sort of putting in place, lockdowns that are relevant to specific places. So I think what is happening now is that if you look at the district level data, what we are finding is that in urban areas, which are more concentrated in terms of economic activities, there the spread has actually come down quite significantly. So the fresh cases are actually fallen. So the number of districts which are showing rising cases actually falling quite dramatically. So that is one. And secondly, the recovery rate is happening. So the recovery rate is actually higher than the overall fresh cases. So overall, there is an inflection point as far as net addition is concerned. So that is happening. And the thing is, your point on the, so the thing is, one has to assume that once the recovery rate exceeds the new cases, what will happen is the number of people who are, or proportion of people who will be subject to automatic immunization will actually increase. So that's a hope. And so the thing is that you have to really accelerate your vaccination process. So today, while the government has said that you're adding vaccination capabilities of roughly like 2 crores by end of the year, so everybody will be vaccinated. What is not very satisfactory is the pace of vaccination that has been happening till now. So that data is available on a daily basis. So that's actually been slower. If you look at the April first week or thereabout, if you look at 7-day average, you are at least 40% or 30% lower. So you have to really accelerate that. The government has promised that. The Niti Aayog guys have actually promised that. So the prospects of the economy is very significantly dependent on how you can escalate your or increase the pace of vaccination. You have a certain space that is coming because the number of naturally immunized people will actually increase because of the inflection point in the fresh cases. So I think it is very critical.
Mrs. Sinha, let me just come in here. We literally on a daily basis spend hours just debating and discussing this, the recovery rates, the cycles, the vaccination pace. Let me just, ask you a very simple question. What is the extent of impact on businesses that we are seeing right now? The restaurants, 30% of them shut down, shut shop, in the biggest of the cities last year itself. Those that managed to sustain largely on home deliveries and whatever little bit of a few months of, in-room dining they had, have again been shut in most cities. Hotels are down and out. So is the aviation sector. The auto sector has shown us a drop. In construction, while the work of construction work is going on in many places, the consumer demand is completely down and out, and so people are not really buying electronics right now. They're not even buying FMCG properly right now, to the extent that you would expect them to, leave alone clothes and everything else. The question I'm asking you is, this second wave, how has it hit the businesses in that sense, and then how much longer will it take to recover from there as things stand? Because honestly, it's very difficult for either you or me to predict what's going to happen as far as COVID is concerned tomorrow.
Yeah, so the thing is, that is a function of vaccination. As far as the businesses are concerned, I would say that relative to last year, the impact is not that great. So it's that big. So if you look at the first quarter last year, you had a 24% contraction in GDP. You might actually see very modest contraction this year because you also have a base effect. So last year, so the numbers might actually look somewhat lesser. So my own calculation is that whatever people were projecting for first quarter, you might be at least 3 to 4% lower. The important thing to really understand here is that the larger companies have actually been able to weather the situation very well. So last year, if you look at it, they are sitting on a lot of cash balances. They cut costs, they repaid debt, their balance sheets are looking better. So in terms of sustaining the shock that will happen in the next, in the first quarter, or maybe a little higher, more than that, they are very well prepared. The problem occurs in the unorganized sector, in the services sector, where the pressure is higher. So I would say that larger companies are able to do it much better. They have significant cash balance. The hope is that once the lockdowns open gradually in major cities, those guys will actually come back. And we have done ground check as well. So we have done a ground check in let's say semi-urban, smaller towns, and rural areas as well. What we are finding is that in smaller towns, the pressure on the medical system is actually receding. Medical facilities are easing. So I think there has been an improvement. So it all depends on how the natural immunization happens, how it opens up, and then how it goes going forward. And vaccination is very important. So in terms of impact, I'm saying that there is a 300 to 500 basis point impact as far as growth is concerned for the first quarter. And if things normalize in the second, third, and fourth quarter during that period, I think there should be an impact of, let's say, 1% or 1.5%. So that is what we are looking at. See, if you look at last year GDP growth fell by roughly about 7%, including the fourth quarter. And so overall, the consensus estimate so if you look at RBI's estimate for next year, it is about 11% real GDP growth. Government is also saying that it could be less than 9%. That's what I can think of. And then, so that is a base case scenario as of now. We don't know if there will be a third wave or a fourth wave. All those things are there.
We don't know what happens tomorrow. You're absolutely right there.
Yes.
Yeah. We can only hope things get better, but the more we talk to the scientists and the researchers, they tell us that there is a possibility of another wave coming in. We still are yet to actually see to what extent will these vaccines, for how long do they protect us with one round itself. And by the time we get to vaccinating the entire country, or at least a majority of the country, to develop some kind of immunity is also going to take some time. So I think the businesses at some point will have to start planning for that. And will have to start planning that now and then at least once or twice a year, there may be lockdown like curbs that will impact their businesses, and in an overall consumer sentiment that may not sustainably revive for a long time. So what happens then? That's the big question. Dr. Devendra Kumar Pant, good evening to you. Any insights that you can add to this? And I'm trying to only understand from a business point of view, businesses who borrowed, maybe even availed some of the schemes that the government announced last year as part of its stimulus package, they ended up taking in more debt to somehow tide through last year, are not even going to be able to see any kind of revival this year at this pace.
Good evening, and thanks for having me in your show. Look, the different businesses have impacted differently. So say, for example, you have the larger firms, their impact on them and their response is but totally different from how the small and medium enterprises have been impacted. If you look at the listed firms, you have looking at their profitability at multiple quarter high, looking at wages growth being pretty low and EBITDA growth being pretty good at a time when your overall economy is slowing down. Yes, the smaller and MSMEs are impacted more. But in entire demand debate, there is one thing which has come out clearly, and Mr. Hussain, I think, pointed it out, that nearly 60% is the non-agriculture. So what is you are going to see even in the rural area, you will see a situation where from the production side, if you look, the production is likely to be better because of good monsoon. But when you look at the demand will be low, or the demand growth will be much lower than what we were expecting a couple of months back. Two reasons. Number one, when year after year consumers are looking at their income growth slowing down, they apply a brake on the consumption. And first casualty always remains the discretionary. So I'm not going into that detail. But if you look at another thing which is happening is as the COVID is spreading in the rural areas, and if you look at the government estimates, nearly 60% of the healthcare expenditure is done by the household itself. Now, had it been a normal situation of demand slowing down or income slowing down, you will see a lesser impact on the demand. But in this situation, where the wage growths are declining, both national, even the urban areas, as well as in the rural area, whether you take the rural agriculture wages, or whether you take the rural non-agriculture wages, both of them are growing slowly. And the households are having uncertain time, they are looking at uncertain situation. A large part of healthcare expenditure done by the household, so the overall demand is going to be, the growth is going to be muted, despite having the demand crash in FY21. Now, if that scenario emerges, naturally what is going to happen is the larger which has wherewithal or which has the access to the capital market and are able to borrow through capital market, they may see a lesser pressure. But all those who are dependent on the bank credit, and without, since in India the credit is collateral driven, not much to offer the collateral, they are going to have a difficult time. So it will be more like what has been talked about last year a lot, about the K-shaped kind of recovery, the difference between haves and have-nots, richer getting more richer, poor are getting more poorer, and the inequality rising in the economy.
Yes, and now two of our panelists have said this, and Mr. Prasenjit Datta, if I can come to you on this aspect and tell me how to see this differently, because I don't necessarily see this as a great sign that the businesses managed to improve their profitability last year. They did so at the human cost, by keeping their wages low, by reducing the number of people who work, and of course reducing their costs and different other angles, including assets and whatnot. But at the end of the day, for people, it wasn't really that great. And if you're going to see a second straight year, it just simply means, from where I stand, more money loss, wages loss, and job loss.
There is something slightly more than that. We we also need to take in the fact that many of the households, whether it is middle class or the poor, would have taken on significant debt for this medical crisis. Almost every family would have, which would have pushed savings of the middle class to much lower levels, would have pushed the lower middle class into poverty levels. And that will show up in the data only in the next few months, and probably in the next couple of quarters. You will, once the debt data and the defaults come in, you will realize that how much this is going to affect demand. That is one part. The second part is that I completely agree with Dr. Pant. The fact is that this has got economic recovery cannot be seen by numbers, for the simple reason that there have been huge winners, which is half a dozen companies which had good cash flows and reserves. And there have been enormous amounts of losers who are not being captured in the early data, because they typically, even the smaller companies, they will typically file their results much later, their quarterly results much later. The people in the informal economy, the numbers will get revised over a period of time, and that is when the full impact will be apparent. So the fact that a small number, I would say that maybe 50 odd or 60 odd companies which make the top end of the stock markets have done well by cutting costs and gained market share at the cost of smaller, weaker, medium enterprises, is not reflecting on the economy, because on the other hand, you have got record unemployment, you have got additional personal debt, and you have got a certain degree of anxiety about the future, which is going to show up in your consumption of everything, including, buying. I would not say that in FMCG, people will stop eating or buying stuff. It is just that they will down trade. What if you were buying a certain quality of soap, you will probably buy a lower quality of soap. So staples will remain this thing, but that is really my point of view, that much of this story will not be seen in the numbers, in the early numbers that are being captured by the statistics department.
Okay, fair enough. Let me also actually bring in Mr. Siraj Hussain on this. Mr. Hussain, would you want to add to what Prasenjit is saying?
I agree with him, and almost everybody is saying the same thing, that the impact of the second wave of COVID may not hit the agriculture output directly, but because of its impact on non-agricultural economy, the income in the hands of rural population is going to be lower, which will have an impact on demand for various items. So I talked to a tractor dealer in Bihar today, and he told me that some senior officers of various companies have passed away, and there is gloom in that district, Sitamarhi district of Bihar, and nobody is thinking of buying a tractor right now. So, however, I must say, and I must conclude by saying that if vaccination can proceed more smoothly, and if India is able to get vaccines, I have written about it that it is a very wrong policy to allow 29 state governments to compete with each other and buy vaccines in the international market. If the central government changes its policy immediately and it procures the vaccines globally and ramps up the production capacity within India, then I think rural economy can regain the confidence much faster. Right now, what is happening is that whatever vaccines are available, even in rural areas, are being cornered by people who are more, friendly with smartphone operations and so on. So we need to do much more to reach out to rural areas, address the vaccine hesitancy, and communicate more clearly and actually deliver vaccines to them.
No, you're absolutely right there. In fact, our rural vaccination drive is there is much to be desired there. Right now, the numbers we are seeing are still coming in from bigger cities and towns as well. So that is one aspect that one hopes will improve. I know when a government gives out numbers like 200 crore doses by end of this year, that sounds great and paints a very hopeful picture. But a lot of those companies that are going to give those vaccines haven't even finished their trials yet. Haven't even struck the deals with the government yet, and so we don't know how much of those vaccines will actually come in. A month ago, government told us that you are all free, the states are free, private hospitals are free to go and get vaccines from any of the foreign makers, and we'll give you speedy approvals, without even knowing that the foreign makers are not going to talk to them individually. They will only talk to this central government. And so we wasted a month just doing that, and only now we've realized that, oh, the states can't really directly procure from Moderna or Pfizer. Again, I will come back to the economy part of it, and one aspect that was raised here by a couple of our panelists, and I want to speak a little bit more about that. Mr. Sinha, maybe you can come in on that as well, is the debt picture. Sure. Personal or small businesses or medium-sized businesses who really, to survive last time around, took on these large loans, what happens to when they start seeing another year of zero demand?
So the thing is, if you look at it, the informal sector has actually undergone, and small businesses have undergone a lot of shocks over the last, I would say, almost like 5-6 years, starting from demonetization, GST, and then you had the NPFC crisis. So I think there has been a considerable structural decimation of the MSME sector and small businesses. So I think that has actually been aggravated by the COVID shock and lockdown, and I think that is a given thing. So if you look at last year, what has happened is the government came up with a stimulus plan of roughly about 20 lakh crores. A lot of that was by way of refinance facilities, etc., and through various government bodies that were actually provided. So we saw that in the banking data numbers, banking data, we saw that banks are actually lending to the semi-urban rural areas. So there the growth was almost like 10-12% versus the systemic lending growth of about 5%. So large companies are not borrowing, smaller companies, smaller businesses are actually borrowing. So I think what will happen is that if you look at this particular year, the RBI came up with a separate plan for the MSME and small businesses. Possibly what will happen is that more forbearances will be given by the government and the RBI to address those the SME sector, etc. So I think that is one thing that will definitely happen. They have started on that path. As far as large businesses are concerned, as I said, they are repaying debt. They saved a lot of their cost. They use technology. They use a lot of stuff to cut costs, etc. So they tried to use that to repay debt. So I think large companies are fairly flush with money. They have structurally been able to gain market share over the last 5-6 years from the loss that has been happening in the informal sector. So I think that continues. So small businesses, unfortunately, are in difficult situation unless the government goes ahead and does a lot of spending. I think they will have to do a lot of spending on the rural side, because many of the development programs that are there, be it NREGA or food security or all other things, they will have to dedicate more resources out there. So that is a given thing. So I think as more pain in the rural sector emanates, I think the government will have to bear more and more burden, including healthcare and other stuff. So I think that will happen. So which means that public debt continue to rise and fiscal deficit will continue to rise. If you look at the economic survey of this year, of last year, they have acknowledged that they will deviate from the FRBM norms for a considerable period of time. So they have actually become no more liberal versus what they were in the last 5-6 years. So I think that commitment will have to be there. Banks will have to take more burden by way of forbearances and all. eventually it will require capitalization and all those things will happen. All this assumes that there will be good pace of vaccination. So good pace of vaccination is very, very, very crucial. Having said everything, I would like to add that average growth rate, if you look at the last 15, 20 years, has actually been declining. And next year, possibly the world GDP will also decline because of the cost pressure that is happening. So the support that we are getting from global trade, that will also be somewhat lesser. So I think average growth is actually coming down. If you look at the average growth from, let's say, 2019 to 2022, it is not going to be more than 4%. So you will have arithmetic growth of 9% or that kind of stuff this year. But I would agree with the other panelists that I think the job creation is actually dissipating because large companies are not really investing, and in smaller businesses there is this loss of job that has been there. So I think that is a crucial structural problem that is there. I think COVID shocks have only aggravated what we have been seeing over the last 5-6 years already.
Yes, and I don't think that will change immediately anytime soon, even if a few larger macro numbers begin to show us a different picture. Dr. Pant, what needs to be done in the light of the dent that the second wave is going to now make on our economy? Like Dhananjay was saying, the government needs to look at spending more, increasing its allocation, maybe under Manrega as well. But last year also, it was a very big challenge for them to step up on their own expenditure when they don't have money coming in themselves.
What has happened, this crisis has struck us when we were on fourth year of growth slowdown. The growth slowdown, which started somewhere around 2013-14, growth moderating. And then, especially last 4 years, see sharp growth slowdown. And if I take you back, why this has happened, the two things which has happened. Generally we are used to looking at public sector, private sector, or we look at economy from the production side or from the consumption side. There's another way we can look at economy, which is from the institution side. So how public sector is performing, how the general government with center state government put together, they are performing, how the private sector is performing, and how the household sector is performing. So the household is nothing but which is neither a public sector, which is not a private sector, which is not a government, that is household. It does not include only the people, families of all those people, those who are sitting in this show or watching this show. It includes all unorganized, unregistered, MSMEs, etc., etc. And why it is so important? If you look at, this is the sector or this is the institution which has the highest contribution to gross value addition. This is the highest contribution to savings. This is the highest contribution to the investment. We believe the corporate sector invests more. No, it is the household sector which invests maximum in this economy. And most importantly, this is the only sector which saves more than what it invests. So positive saving investment gap of household sector finance the negative saving investment gap of public sector, private sector, and the government. Unfortunately, if you look at right from 2012-13 onward, the journey of this particular sector is downward. The savings rate has fallen. And if you look at personal loan to GDP ratio, that has gone up. Fortunately, these two curves, savings to GDP ratio, household savings to GDP ratio, and personal loan to GDP ratio hasn't crossed or intersect each other. Otherwise, if the trend continues, maybe in next couple of years, the leverage of household or personal leverage will be more than the household savings. And that will be a catastrophic situation for the economy like India. Now, because of this...
Yes, so in fact, exactly, go ahead please, yes.
Can you repeat it?
No, go ahead, finish your point.
Yeah, so what I'm saying, unless this sector improves, it is very difficult to have the economy back or a sustained growth of even 7% year after year. This year we may see Earlier expectation were double digit. It may be the high single digit now. We don't know how long this will take place. So answer lies in which all analysts is saying, vaccinate, vaccinate, vaccinate. Because even now, if we do the full force vaccination, even it will be difficult by end of this fiscal year, we'll be able to vaccinate 18 plus. And until unless here you can say, draw the analogy from movie Three Idiots, all is well. Unless that all is well comes in our understanding and we see the people are vaccinated, mobility increase because all services sector, which in the production side have the contact intensive services that are going to be a laggard sector, and that is going to be delaying recovery. What we need right now, last year we had talked about 20 lakh crore worth of fiscal stimulus. But if you look at the budget, we don't see that kind of expenditure being done. Now, that is the requirement. You have to, in order to give a stability to the growth, in order that yours, our sustainable growth or our potential growth does not fall below 6%, we have to act now. If we don't act now, it will be too late.
Yeah, you know, you've put it very beautifully, and the way you explained it, and I hope we are able to act now than when it becomes a catastrophe and then we respond to it. The fact that people's savings had already been going down and that had been a larger trend that we've been speaking about. Add to that the fact that their wages are not growing at all now, perhaps coming back in a few coming down in a few segments, or there are job losses, is just adding to this pain. The consumer sentiment, Mr. Vinkesh Gulati, has been now down for almost 2.5 years, or almost 3 years now, that the consumers' demand and the consumer sentiment has been a problem. Now, with every household facing some or the other COVID problem, all of us know someone who's gone through a nightmare of an experience. All of us, in our circles would have lost someone to COVID. Many of us would have dealt with extremely high cost, Mr. Gulati, of COVID treatment, healthcare, healthcare bills as well. That sentiment may not turn around very quickly, even for consumer goods.
Yes, Tanvi, you are right. And one thing is very clear: auto segment sees the growth when the overall sentiment is good. So it's a happy purchase. So it's a very important day for anybody buying a vehicle of 50,000 or a 50 lakh. For that, the family has to be safe, healthy, and happy altogether. But no doubt, India is a country where hope is everything. So we all in the retail industry still hoping that there will be good monsoons. There will be some government stimulus will be there to help us. But the ground reality as of today is not that good. So we are going through places where the demand has muted. We are seeing cancellations happening of the bookings what we got pre-lockdowns. Lot of postponement happening, and overall the customers are not very interested to talk about buying a new vehicle, even if they have booked it. So the sentiments there, like you already said, the hospitalization expenses have hit many, and I feel now everybody, every family may have gone through a fatality in the immediate family or in an extended family. So not a good place. So like I was talking day before yesterday to somebody, and people were saying maybe 30% of India will not celebrate Diwali this time because of the such reasons of going through bad times. So obviously all of these, when it hits the sentiment, the problem comes down to the expectation of the customers coming, weakening walk-ins at the showroom, and obviously muted demand. But one thing I will want to express to the all the great panelists, we're talking of vaccination a lot, but see, we are dealers and we have seen people on the ground. If we talk to our manpower, which is rural based, and we force them to get it vaccinated, they are not coming forward. Their parents are restricting them to go for vaccination. Even if you talk, I just saw the report some time back that UP and Bihar, around 40% of the rural people are not interested in vaccination. We don't have the right amount of vaccination today. The problem is different. Then the rural folks are not ready to get vaccinated. How are we hoping so much on vaccination for the economy to come back? So one thing where is the demand is muted. The second thing, if I talk of the overall economy, last year it was a central lockdown, which helped us a lot because then government took the charge, came up with a lot of moratorium, lot of restructuring, and even a scheme which gave that ECLGS where 20% of all the loans, term loan, channel funding, everything was given additional to support. We have not seen growth till from last lockdown till today. So practically we had to earn more 20% to pay back that 20% and become normal. So we haven't grown 20%. How could we have paid 20%? So basically whatever the debt we had last year, it has grown by 20% with some going back, and now we are again standing still. Around 45 days our showrooms are closed, no retail happening, nil revenue again, and our overheads, our cost is already there. And because it's a state level lockdown, no benefit coming from RBI, Finance Ministry, whatever. So no doubt FAD has written to them for moratorium. No doubt, I just came to know a lot of private banks, MDs have discussed with RBI to provide something. But unless and until, and again, all together, I don't see anything happening on the good seeing in the economy side or even the demand side.
Right. So let me actually go back to Mr. Sandeep Bhardwaj, because Mr. Bhardwaj was one of the more optimistic ones on this panel. Mr. Bhardwaj, so of course, and a lot of this is dependent on how the virus behaves and how the vaccination pace may pan out. But where do you see, a quicker revival or a quicker recovery really coming through? Which of the sectors would you look at then?
Say, largely, though I agree with most of the panelists where they about the concerns, but we also need to look at the India is pretty big country and it is well divided into the bigger cities and a rural area. Last time when the lockdown happened, the bigger impact was in a bigger cities and the impact on rural area was lower. As agriculture production still remain on a positive. I see the India is also opening up in phases. So bigger cities has more equipped in terms of medical infrastructure. So I see that all the bigger cities, tier 1, tier 2 should open up fast. Vis-a-vis rural will take some time because I think medical infrastructure is also not there. And, by the time vaccination or medical infrastructure takes place or herd immunity, helps those cities to revive. Once that happens, I think the demand should fairly take place over the period of time. But as you ask the question about the sectors, I think if you look at from last year, IT, pharma, and chemical, these are the three top sectors which have performed really well last year. And we personally believe that these sectors are fairly has a lot of steam left, and they should continue to do well. And I have one more point to make here is that if you look at the cost of one-day lockdown, or an impact on a GDP is far more higher than if the government puts all the initiative and spends money to expedite the entire vaccination, speed. But other than vaccination, there is no immediate or visible solution. So rather than extending the lockdowns or doing the restrictions, I think government has to come down. All the state and central government has to come down on a common forum and plan to spend higher in terms of bringing the vaccination available in India or increase the production or the development happening outside India to bring vaccination in place. So as a whole, we can get out of the second phase. So this is what is my take on this.
Okay, fair enough. I'm a little short on time, but Mr. Prasenjit, final comments from you.
Yeah, I just wanted to say that there's been a lot of, see, in the last year and even this year, whatever is being done to help the economy has largely been done by the central bank. whether it is in giving, the moratorium last year or anything, unless the government can get its policies right, I don't think that we can look at a recovery, because so far it's only the central bank, whether it is the moratorium, it's soft loans, better credit, higher liquidity that we are seeing. And that is not enough, in my opinion, to get the economy back on the track.
No, you're absolutely right here, and I think that's something that everybody is expecting the government to do. To what extent are they able to deliver on that will be interesting to see, because despite what we saw last year, there wasn't anything significant announced in the budget, and so far nothing has come through apart from, again, the central bank. Thank you so much to all of our panelists for joining us right now. Viewers, here is the simple point that I was trying to make. The damage doesn't have to be as big in a percentage wise as it was last year when we contracted 23%. But when you say that you're already down and out, and then you get beaten a bit more with the second wave, it just completely breaks your back and takes away your strength. That is what has happened to the people, and that's what's happening to the businesses as well. Those who somehow manage to survive, take on some loans, pay off their staff and employees, and hold on to their businesses, manage some amount of cash flow to run their daily operations, are now staring at another round of challenge. And that is what will lead to the pain. It doesn't show up in the profits of any large companies. It doesn't show up in the stock market gains of a handful of investors. It shows up in the way people behave. It shows up in the way people spend money or don't spend money, in the sentiment that people show, whether or not they have a job, or if they have a fear of loss of job, if they are dipping into their savings, if they are saving less right now because they don't have that much of money, if they are seeing wage losses, that is a problem. And when you add to this the fact that now there's an entire part of our country, the rural India, that contributes 30 to 40% of our growth, that has badly suffered this time, imagine. This needs urgent attention now by our governments. Thank you for joining us.